Hey, how you doing? It's Graham Taylor here at Hudson Rose, tackling the issue of school fees. Not going to pay them for you or anything like that, but can give you a bit of insight over how mortgage lenders treat them with reference to a couple of situations that we see quite often. And it's quite some interesting stuff. Interesting if you're into mortgages like me. Very interesting if you applies to you need to get a house or remortgage. So, school fees generally are taken as a commitment in the same way that a loan or a credit card or car finance or something like that, okay? They say, well, what is the monthly payment equivalent? Because I know you often pay in terms, but what's the monthly payment equivalent? And they deduct that from the affordability. Now, occasionally you have a situation whereby you might have investments or some money that you've got a lump of money that's set aside to pay for the school fees. And you say, well, actually, it's not a monthly commitment because I've got, you know, the however much it is for the next 5 or 10 years or however long it needs to be to pay for them, right? Which is a really valid point. So what do lenders do in that situation? Well, unfortunately, for the most part, they still take the monthly cost as a financial commitment. Because their argument is, well, you might go and spend all that money on something else and then still have to pay the school fees, okay? So I would say literally 99% of the market does that. There are a couple of lenders whereby if you can evidence you have the savings and investments enough to cover the school fees, can't get my words out, then they will discount that from the affordability calculation. So that's something to be aware of, something that we can help with and something we help many clients with. The other situation we come across is whereby the school fees might be paid by grandparents or something like that, okay? And you've got a situation whereby each month the cost of the fees comes from your bank account, but the money comes in from the grandparents or a third party, you know, to pay for the fees that way. In that instance, unfortunately, if it's coming out of your bank account, they're still going to take it as your commitment, regardless if somebody else is paying it. The only time that wouldn't be affected is if the grandparents were paying the school directly. So if that's something that's an option to happen, then that removes it from your affordability calculation, because otherwise they say, well, yes, but if the money doesn't come in to reimburse you, you've still got the liability. So again, if that's what's happening, have the conversation with grandparents and things to see if they are happy to pay the school directly, and that removes it from your affordability. So yeah, a couple of things on school fees, quite niche, but interesting nonetheless. If you think we can help with your mortgage, be it a purchase or a remortgage, do give us a shout. You get through to the main switchboard number on 0330 122 9920. I'm conscious it's not the same as that number in the background. That's our Cirencester office. Give that a call if you want. Or you can go on our website, www.hudson-rose.co.uk. Yeah, that's all for today. I'll catch up with you all soon. And yeah, in a bit. Bye.